Okay, so good afternoon, everyone, and welcome to the Hoperation Fund monthly meeting for April. So the return in April was negative 4.2%. In April, I sold SYF and I purchased IAUM and more of SQQQ for hedging. So the total return of the Hoperation Fund since its inception is now 62.6%. The year-to-date of the Hoperation Fund is negative 6.87%. Around about the same as Spine QQ with negative 5.38% and negative 7%. So you can see that so far this year has not been a very good one for the stock market. Mm, So now let's move on to the market analysis. The market direction for the long term right now, I believe, is bearish, and the midterm market direction is neutral. Because there's been many fluctuations. I believe it's not I'm uncertain about whether or not the short to midterm market direction is bullish or bearish, but I do know that the long term is bearish. The short-term market sentiment right now is fearful but leaning slightly towards neutral. As you can see, the CNN Fear and Greed Index is 43. So for suggested position sizes, um, although this varies depending on your own investment directions, I would say have about 10 to 20% in stocks, 30 to 60% in cash or short-term bonds, 20 to 30% in long-term bonds, and 10 to 20% in gold. So the market right now is very overvalued. The 10-year Treasury yield increased to 4.308%. And as we know, if we take the reciprocal of the 10-year Treasury yield, we get a good estimate of the market's value. So if we take the reciprocal of 4.308%, you get about 23. So 28 is of course much larger than 23, so I would expect maybe a market correction of about 20-ish%. Okay, so where are we now on the stock market and economy cycle? Actually, it's pretty hard to say. Um, on one hand, March's inflation data released in April indicates declining inflation and declining prices. But however, economists caution that recent tariff increases, like Ohm said, particularly on Chinese imports, may exert upward pressure on prices. So the full impact of these tariffs is expected to materialize in CPI data for April or May. And the Bureau of Labor Statistics is scheduled to release the April 2025 CPI data on May 13th. So I would recommend waiting a little to see where exactly we are on the stock market stages graph. So while I don't have a definite answer, I think the market right now is probably in a temporary rebound within a forming bear market. But as I said before, you may need to wait and watch a little to see and to make that judgment on the market. Okay. So now let's continue to our financial news section. So last time, I asked you all if if there were any volunteers who wanted to um, share a or present around a 1 to 2 minute report on recent financial news. And the following three people, Arav, Sebastian, and William, volunteered to present their report today. So I see. Oh, so I see Sebastian is here. So how about you present your report? Thank you so much for volunteering.
All right, well, I noticed that the for the first quarter of 2025, the GDP is down 0.3%, which is actually 0.7% lower than expected. And if this continues another quarter, it will be a recession. So this is actually probably mostly because of Trump's tariffs. And since the market is moving all around, people don't really want to like spend a ton of money buying stocks, so people are more like scared to buy like a ton of stocks. So basically the stock market is like I think the stock market is like going into recession. Um because everybody is so since nobody wants to buy it, then the stocks are going down. And so yeah.
Yeah, thank you so much, Sebastian. Um, yeah, your facts are all true. Yeah, I do believe there might be a big probability that the market is going into a recession. And so thank you so much for that, like interesting and informative report. Uh, yeah, do you have a question?
One thing I forgot to say is that it hasn't gone down this much since 2022.
Yeah, true. So thank you so much, Sebastian, for sharing that. And I think you have a question, or do you want to share a
I
report?
just have something to note that the US dollar has gone down in value because of Trump. So that's something to look out for because of the volatility of the US right now.
Mhm. Yeah, I think the US dollar used to be pretty like stable, but now like since it's gone down, yeah, that's really something to note. Okay, so thank you again, Sebastian, for sharing that report. Um, I think is Rob and William here? I don't think you're here yet, so I think we can like later on if they arrive, they can give the report. But anyways, thank you so much, Sebastian, for sharing. Oh, and I want to confirm. Do you want to do a report like this next meeting too? Um, Sebastian, like, um, would you like to do like a report like this next meeting too, it or
Sorry, I was having technical difficulties.
Sorry, I couldn't figure out how to unmute for a second. Sure.
okay, sure, okay, that would be really great. Again, thank you, and I guess we can look forward to your report next meeting too. Okay, so moving on to from the financial news, I have three main things I want to discuss with you guys today. Mm, well, actually, two, I guess. I think I was going to update with our VP of our VP of media design, Egg, about the progress of a flyer I assigned her to design, but I think we can do that next time. So thing I want to talk with you guys is about how we are going to fundraise. So in order for the Hoperation Fund to make like a big impact on like whatever charity or charities we are donating to, we need to have like more and more funding, as you guys probably know. Um, so raising capital and like getting more fundraising and maybe new members is a really important part of the Hoperation Fund, and in order to actually like um make an impact and like we achieve our goals, we need more fundraising. So do any of you guys have any ideas of how to get more fundraising? Any ideas good. Um, but we do have like we don't have that big of a budget, so maybe if you guys have any ideas that are slightly low cost, instead of like creating this big giant event, or something that's like more online, because like a lot of the members of the Hoperation Fund are in different states. So if we do like a local in-person event, um, we we would have to um strategize a lot on like where to do the event. So do any of you guys have any ideas for fundraising? Okay, I think own.
I just wanted to say that if people would most likely want to do for fundraising, people would most likely want to fundraise directly to the things that we're donating to instead of it going through a third party. Just wanted to put that out.
Yeah, that's one idea, but I feel like I'm a big portion of people would also might be interested in donating that to the Hoperation Fund, because here at the Hoperation Fund, we like borrow your money to invest and then we give back the money. So like maybe if people were interested in like donating without any cost to themselves, they might like donate to the Hoperation Fund. So I think like if we're going to fundraise, instead of emphasizing on like whatever charities we're donating to, although we're gonna emphasize that too, we might also emphasize how like the Hoperation Fund lets you donate to charities without any cost, because like that's what makes us unique, right? Like instead of like donating directly to a charity, but like having to like lose a lot of money, um we we as kind of like a third party, we let you like donate to that charity without any cost. So I think we could emphasize that um during fundraising.
Yeah. Mm-hmm.
Sebastian, do you have like an idea?
Yeah.
Um, what happens if the fund goes down when you're supposed to pay the people back?
Okay, first of all, remember that like the Hoperation Fund, we've had really high previous returns. So, in order for like the Hoperation Fund to lose its original capital, we would have to have like a very big like loss, like over 60 something percent, like 50-60%. And additionally, um remember that when like we get the investment profits like after investing the donations we get into the stock market and donating it to charities, we only donate 80% of what we earn in the stock market to charities. We keep the 20% to for the Hoperation Fund, like to like for its own like operations, and to like reinvest in the Hoperation Fund. So we have that portion of money that's not like the donator's money or anyone else's money. Additionally, um, we also I also like invested in the Hoperation Fund too. So a portion of the money that we fundraise from the Hoperation Fund is actually from me and from like my own family, not from anyone else's. Not with anyone else's money. I think like only like a portion of the money the Hoperation Fund has is from like other donators, because we also contributed a little. So that so if the Hoperation Fund does experience like super big losses, like super huge losses, um, um, I don't think that will like affect a lot of like people. Additionally, the Hoperation Fund isn't that big, so we don't have like millions of dollars in capital. So if anyone does lose their money, then I guess we can still pay them back. But that's not the point, though, because I believe that even though the whole Hoperation Fund has had like recent dips in returns, I believe over the long term we will still have like high positive returns. It's only like recently the stock market has been in a pretty bad um bear market ish circumstance. And I believe over the long term, the Hoperation Fund will receive high returns because, of course, every portfolio and every investment strategy has times where they may lose some money or underperform the market or anything. But in the long term, I believe we will still have very high returns. Okay, and so back on the topic of fundraising, does anyone have any ideas for fundraising? After all, we're all in the Hoperation Fund together, so and we really do need fundraising in order to um achieve the Hoperation Fund's purpose. Okay, then okay, Emily asked me tutoring. Okay, Emily said we could like tutor others potentially. Yeah, that's a good idea, Emily. But how do you think we would like tutor others? Like, do you think the members of the Hoperation Fund would tutor others and like um tutor what subjects? Like finance?
Yeah, I was just thinking the members could tutor because I've done tutoring before for like English. Honestly, I feel like if it's for like some young people, it could be any subject or finance or anything.
Oh, that's interesting. That's a good idea actually. But like, how do you think we would like get people to like um be tutored by us?
Yeah,
Do you
that's a
think?
good question. I don't really know. I haven't thought about that. When I did tutoring, someone reached out, so it wasn't like I was the first to like do the first move, but I'm sure we can find some people, but it might not be the best idea.
Mm-mm. Okay, but thank you for that idea, Emily. I think if we were to tutor others, we would figure out like how we would like reach out to other people to like let themselves be tutored and how we were gonna find tutors. Because like members of the Hoperation Fund would have to like volunteer to be tutors and all that stuff. Um, okay, Chloe added contacting organizations for their interest. Wait, Chloe, do you mean like like
Like we could like email other organizations and like kind of like advertise it for like their interests. Like I mean, it's kind of quick and like it's like no money. Like all we have to do is like email them for their interests.
okay, so you plan to like cold call or like email organizations and like
Yeah,
to
yeah,
promote
yeah,
Working Fund?
yeah.
Okay, I think that would work too. I think wait, so do you think there would be any benefits of like directly emailing the organization versus like promoting it on social media? Like promoting
Well, I mean, like, um, I think there will because like on social media, like it's sometimes kind of hard to get people to see it. Like, but like if you email them, I mean, it might like I can't promise that they will reply, but like it's like I mean, it's
okay,
probably
yeah.
not very like yeah.
Oh, I get your thoughts. So I guess like with emailing organizations, we can like directly promote the Hoperation Fund to them, so they might be more um likely to respond. So what organizations do you think we should email?
I think really any organizations that but like probably some small organizations, not like really big organizations.
Wait, so organizations, you mean like charities?
No, not charities. Like I mean like businesses.
Oh, businesses?
Yeah, yeah,
Like
yeah. Because like they wouldn't give us money, like because since they're like a charity, you know what I mean?
I guess. But okay, so Chloe, if that's a good idea, so I guess if we're to do that idea though, we would like need to find organizations and their emails, and we would also have to like create an advertisement. Well, speaking of which, Emily, I didn't see you before. Um, um, so I think I asked you, Emily, about about the task of like making a flyer before, and I asked you about like if you had any progress of the flyer, except I didn't see if you had a reply or not. So is there like do you have any like progress that you made to the flyer that you want to share? Or would you
Yeah,
prefer?
I worked on it. Sorry, I didn't see your email until like right now. But I have the two visions and I added some like visuals that you want in like color and I put why the reader should get involved, but I haven't done the other not like information about our meetings yet.
Okay, that sounds great, Emily.
Yeah.
Um, oh yeah, later on after the meeting, can you like send me a photo of the flyer? I just like I'd be curious how it's turning out, but it sounds really great. I I think the flyer would be really good, important, if we were doing in-person outreach events or fundraising events and we could like distribute the flyers, or if we were to like email the flyers to people for advertising.
Yeah.
Okay. Yeah, that's cool. Okay. So I think us is you want to add something?
A YouTube channel about finance tips because that advertisers pay the most money to finance YouTube channels. So we can collect the ad revenue if there's a we make interesting content, not just recordings of our meetings. Um, then if we get bigger, then advertisers would want to have ads on our videos, so that would be a good source of income for the Hoperation Fund.
Yeah, that's a good idea though. We already have a YouTube channel, as you know. I we could like include finance.
Because like
You
also maybe short form content because even though it doesn't pay as much, it can get people introduced to our YouTube channel.
Okay, so but if we were to get like advertising fees, and let like other people advertise on their videos, we would have need a lot of subscribers for that. Like,
Yeah, that's why we would need to put grow our YouTube channel first because to me the current YouTube channel wouldn't seem that interesting.
mhm. Um, but for that though, we would need a lot of like time commitment because it's really hard to get like thousands or
Yeah.
millions of subscribers. Um, but and I don't know how we would make those finance videos. Like, do you think members of the Hoperation Fund could like come together and like create those finance videos?
Yeah, people could do that and then post it over there.
Okay, that's a great idea. So does anyone want to like make some finance videos? Like, do you want to like make a video about finance so we can post?
Sure. Sure, but then you would need to give the objective of the video. Like what I should be what I should be creating content about.
Um, sure, but I feel like if I were to like make a schedule or a plan with YouTube videos, I think there might be like too time consuming, but we could set like a department or like a section of the side section of the Hoperation Fund to do that if you want. And you could like lead it.
Sure.
Okay, that sounds great then. And if you guys have
Oh,
and if anyone else wants to like make those finance videos, then I guess we can't. Hold on. This is like what I do. Okay.
uh,
Oh, hi, Rob.
oh, hi. I'm sorry I'm late. Whenever you're ready to hear my presentation, I'm here.
Okay. I guess we can hear it after we're done with discussing fundraising and with the charity ideas. Maybe in about like 10-ish minutes.
Okay.
Okay. But I'm really excited to hear your report. Okay. So does anyone else have any other ideas for fundraising? Emily said tutoring, Chloe said contacting organizations for their interests, and Om said making a YouTube channel. I guess Chloe, if for the fundraising idea, contacting organizations for their interest, if you can find a list of organizations for me and like to email, because I'm not really sure what organizations I should email. But if you can find a list of organizations and their emails for me to email, I can like make an advertisement, or since Emily is currently making a flyer, I guess we could email the flyer once it's completed to those organizations to promote. And it would be a really good idea. And Chloe?
Yes.
Hmm?
Yeah.
Oh, okay then. So that would be great then. And I guess you can email a list of organizations and their emails to me after this meeting if you have time. And I guess if you or you can email me later and we could talk about the YouTube video thingies, and yeah. But those are great uh, those are great ideas. Um, okay. Does anyone else have any other ideas? Okay. In that case, then let's move on to talking about charities. So, okay, finding charities and donating to charities is like the most important part of the Hoperation Fund, besides fundraising, okay? Even if we have lots of like fundraising, which we currently don't have, but even if we do have lots of fundraising, picking charities is super important to um for the Hoperation Fund to make an impact. We need to pick the right charities to be able to um, make a important contribution. Alright. So there are things about three crucial things about a charity that we need to consider. Number one, being specific. We cannot just like pick a few 5 or 6 random charities and like split some of our money to donate to each charity, maybe like a few $100s to each charity. Um, if say we donated a few $100s to each charity, we would not be making like a big impact on that charity. We need to, and we don't have the capital for that. We need to pick one or maybe 1 or 2 charities to donate to over the long term and donate like thousands and thousands of dollars to that charity for a few years. So we need to be specific about what charities we're donating to. We can't just like randomly donate to like search up and select a few charities and donate to those charities. And a second thing about the charity is that besides like selecting one or two charities to donate to for like for the long term, we need to select charities that are overlooked. So I'm sure, are you guys familiar with those like St. Jude's Children's Hospital ads?
Yes.
Okay, good. Emily and Rob, you guys are familiar with those, but we can't donate to those to like those charities such as St. Jude's Hospital. Why? Because we don't have that much capital in the Hoperation Fund, and um, if we do donate to the St. Jude's Hospital or like those big organizations, they have hundreds of thousands, if not millions, maybe even, of donations every year. So if we just donate like our few $100s to them, um, it won't even like matter to them. It would be like throwing a pebble into an ocean. Because they have so many donations already, they don't even need our few $100s or maybe our few $1,000s. And even if we do donate like $10,000, so what? They have so much donations already. So we need to find overlooked charities.
I
And
know I know of an overlooked charity.
oh, really? Oh, okay.
Yeah.
What is it?
It's called Kenya Relief. It's an orphanage in the country of Kenya in Africa, and they you can sponsor kids there, so then they can get to go to school, and I think it's a really unique charity.
Oh, that's a good idea, Rolf. But like, how big is like the Kenya orphanage thingy?
Yeah, I'll send you the website.
I'll send you the website for it.
Oh, okay. Because we can't like afford. That sounds like a great idea, but if it's like super big, I don't think we can afford to donate to it because, as I said before, some of those big charities they have so many donations already that they might not even need our donations too. But that sounds like a good idea, Olaf.
It's not that big. It's just one orphanage in Kenya.
Oh, interesting. Then send me the link after this meeting, and I'll look into it.
Okay.
Okay, thank you all for that. That's really interesting um recommendation. Okay, oh,
Maybe the Greater Chicago Food Depository,
okay,
because
hmm?
it's a medium-sized charity, but compared to some other charities, it's kind of small. It's a food bank that helps people in Chicago.
Okay, that's interesting, but um, it's a food bank, right?
Yeah.
Okay, that's interesting. I will look into it, but that brings up another topic I want to talk about today, uniqueness. So what I don't really like donating to food banks, why I don't really like donating to food banks or food lounges, is that there are so many of them. Okay, so I'm pretty sure all of you guys have like no heard of like food lounges, food banks. You guys know a lot of people who volunteer to them. Like there's like 10, 20 food lounges in like this DFW area or something, or there seems to be. And yeah, there are so many of them. So at this point, it's not even unique. Um, like we need to pick like an area to invest in or to contribute to that's unique, that maybe that's again overlooked, and some people don't even know, maybe not even like didn't even think of it. Like for example, let me tell you the story of this girl who went to Harvard, okay? I think she was featured on Shark Tank once. Anyways, so when she was little, she began starting a company that's I think sold honey and other stuff. And all of the profits she made from that company, she donated to charities focused on conserving bees. And over the years, she made so much money from that company and she donated so much money to all those organizations focused on conserving and helping protect bees. And she also like did events where she educated people about the importance of bees and of saving bees. That she made a really big impact. So I'm talking specific, overlooked, and unique. Because before I heard of her, I had no idea bees were that important, okay? Like if I saw a bee, I would be like, oh, you kill it. But in truth, bees are very important for like the agriculture of Earth, and like they pollinate plants, vegetables, flowers. And without bees, many crops wouldn't be able to grow as well, and you wouldn't see that much flowers. And again, bees are like an endangered species now. Every year, their numbers are falling and falling, but they're super important to Earth. So this girl, oh, she donated so much money and she did so much stuff to help protect bees over the years that she made a huge impact on like help preserving bees or so so that's what I'm talking about. We need to pick a charity that's specific, or maybe not a charity, maybe like an area or an idea that's specific, overlooked, and unique. Okay, so speaking of which, I have an idea for a charity, you guys. Uh, it's so recently I reached out to some of my contacts, and I found like an elementary school called Libriton Elementary School in the Philippines. And it's in a really like underprivileged and impoverished area. The school is in a lot of need for like funding and for um, and like renovations and stuff. As you can see, it's a pretty small school. This is actually the view from like Google Maps, so you can see and the gray, and it's like a pretty small school too because it's in a pretty poor area. Um, this is I think this is the entire grade of kindergarten, about like 25 people. And you can see here the classrooms. No air, number one, no air conditioning. Number two, no computers. There's a blackboard. Number three, you can see the table. It's like taped together. I think this would be a great thing. This could be a great charity initiative we could donate to, because I'm in the process of reaching out and emailing the principal, and they are in like dire need of like funding. And I think if we could like over a few years maybe help renovate the school, buy books and school materials for these like kids, and help like maybe do events where we could help like teach them or do educational events, I think we could make a big impact here. I'm talking like a major impact. And this would like go really well with our mission, because one of our missions is to help educate people about like finance skills that are not taught in school. But if we donate to the school and help the school, um we could like help so many of these like kids learn and have a good like future and have a good education. And I think that would be really good.
That's just like what Kenyan belief is.
Yeah, kind of. But like Kenya, I think believe is an orphanage. This is like a school, but yeah, similar. And again, this isn't like a charity already. It's just like a school. And you can see here is the photo from like Google Maps. I screenshotted it. So this is just one like overlooked, impoverished school in the Philippines, and it's not like a place where there's a lot of like corruption and others and like poverty again. So I think this would be a great um place for us to um contribute to. And again, I have some contacts in that area too who would be willing to help. So what do you guys think?
I think that it's a great idea.
Thank you. Sebastian?
I think it's a good idea because you said that like the tables are duct taped together and stuff, so that would probably really help them.
Yeah, as you can see. So I think this school is like is like in need of a lot of funding, and this is like the perfect way to help people because right now in the US, okay, so there's a lot of people who are in need, and there's a lot of people again who need like water, education, essential stuff, food and stuff, but compared to other countries, okay, the US is like gold, okay? At least here we have a lot of charities targeting the US, and we again like okay, I'm pretty sure everyone here has computers, you have water and foods um security, and you have like educational security and etc whatever, and there is a lot of people in the US that like need that, but not as much compared to other countries such as the Philippines, which is like still a pretty developing country. For the Philippines has many areas that really badly really badly um, need development and funding, or like Kenya, as you guys said, that's also an area that a country that really needs development. I feel like if we target that. If we target our efforts toward places where they really need development, I think that would be great. For example, there was a charity in China, like some students started it, and it's really inspirational. Basically, like they're in the city, of course, but they went to like country places in China, and like they gave like in impoverished places in China where like they where some students have trouble having like water and food, and not to mention education, and they bought them books and etc kind of like that. Okay. So, I spent a lot of time talking about this. I think let's move on to the investment lectures for today then. Just like leaving this out there. So, right now I'm gonna skip the Ray Dalio All Seasons portfolio and the 60/40 portfolio. Let's skip that. We will do that later.
You
Hmm?
want to go to the news?
Yeah, and we will continue on how to evaluate a portfolio or strategy. Oh yeah, I almost forgot. Yeah, thanks for reminding me. So Rob, I think since you're here, you can share your report.
Okay. So my report is on how do the tariffs affect investment. I don't know if you know what a tariff is, but it's like when a country decides to tax another country for their goods. So take Nike for example. Their shoes are made in China, Vietnam, but they're an American company, but the shoes are made in Vietnam. So if the United States put tariffs on Vietnam, then it'll be harder to buy the Nike shoes. More expensive. So pharmaceutical and healthcare industries will be the least affected by these tariffs due to their critical importance. So they get exempt from some tariffs. Also, they are primarily made in the States. Also, but technology, automobile, and consumer goods such as shoes and clothing will be heavily affected due to their they rely on other countries for their parts and how they're made.
Okay, thank you so much, Rob, for that report about how tariffs would impact companies and potentially the stock market. Because I know many people, they may be like, oh, Donald Trump is increasing the tariffs. Oh no, but what does that mean? So thank you so much for like enlightening us and providing that informational report. Rob. Okay, so again, I asked Sebastian this too. So Rolf, are you okay with presenting a report next meeting too? Or do you think like this meeting is so Rolf, would you like to like present a report for next meeting too? Or
Yes.
okay. Thank you so much, Rob. And Sebastian for taking the time to make these reports, and they're really informational. And thank you so much. Okay, so now let's move on to our investment lecture for today. How to evaluate a portfolio or strategy. So I have a question for you guys. Given so many portfolios, ETFs, or strategies that you've learned about, for example, the Harry Brown's permanent portfolio, Ray Dalio's all seasons portfolio, which we were supposed to talk about today, Buffett's 90-10 portfolio, the 60-40 portfolio, and the S&P 500 index ETF, which one do you think is the best? Which one do you guys think is the best? Okay, so many people have different ways of evaluating their portfolios and strategies. The most obvious way some people do is just to look at the returns, but that's actually not the best way. You need to approach evaluating these portfolios in a very scientific, even way. So the step one is to obtain the monthly returns of like all of the portfolios you're comparing over at least 5 years. And more than 10 years would be preferable. Step two is to calculate the following metrics. And there are many metrics, but I listed the most important ones here, or in my opinion, the most important ones. The compound annualized growth rate, or CAGR, standard deviation, maximum drawdown, and the Sharpe ratio. So let's talk about these in detail. The compound annualized growth rate is basically the average return of a portfolio every year, like compounded, of course. Mathematically, the formula to calculate CAGR is over here. It's basically the ending value, which is the final value of the investment at the end of whatever period you're comparing them in, divided by the beginning value, which is the initial value of the investment at the beginning. You get that, and then to the power of 1 over the number of years. Then this is the total duration for which the investment is held. So if you are comparing these portfolios over 3 years, from the beginning values and your ending values after 3 years, then the number of years would be 3, of course, and minus 1. So here's an example. Given a portfolio, in year 1, its return is 20%, in year 2, its return is negative 15%, and in year 3, its return is 10%. So what's the CAGR over the 3 years? I'll give you guys 1 to 2 minutes to calculate this if you guys can. Try and see if you can get the answer. Okay, and so I think since we're a little bit short of time, um I will give you guys the answer then. Okay, Oliver said 3.91%. Interesting. We'll see if that's correct. Well, 3.91%. Okay, so also, please don't annotate on this. Okay, so so first, to calculate this, we find the ending value divided by the beginning value. So say the beginning value is 1, okay? The ending value would be 1 plus 20%, which is its return in year 1, times 1 minus 15%, which is the impact of its return in year 2, times 1 plus 10%, which is its return in year 3. So multiplying these together, you get 1.122. That means the ending value divided by the beginning value is 1.122 over 1, which is 1.122. Using the above formula, we can calculate that the CAGR over the 3 years for the given portfolio is approximately 3.91%, which means on average, the portfolio grew by about 3.91% each year over the 3-year period. So yeah, Oliver, you were right. Oh yeah, and so sorry, I didn't see that. Sebastian said about 3.9%. Yeah, you guys are both right. So yay. So now you know how to calculate the compound annualized growth rate. The standard deviation is another metric. The standard deviation measures the dispersion of returns around the mean and is often used as a measure of risk. A higher standard deviation implies greater dispersion of data points around the mean, or greater risk. The smaller the standard deviation, the better a portfolio is. So here's the formula mathematically to calculate the standard deviation. But if you haven't learned how to calculate this, or you can't understand the formula, that's okay. You can just look at this visualization here. So here are two lines, the blue line and a red line. So these two lines are both have a mean of 0. So if you were just looking at comparing these two lines based on their mean, you would have thought there was no difference. But in reality, you can see these are very different. The blue line has a smaller standard deviation and the red line has a larger standard deviation. So while their mean is the same, their standard deviation is very different. And you can see the red line with the higher standard deviation has higher volatility. It goes up and down, and its up and down fluctuations are much bigger than the blue lines. So say, okay, let's pretend these two were actually the graph of a stock and they ended up at around the same price or the same profit. Which stock would you rather have? The answer, of course, would probably be the blue one, if they ended up with the same return, because of course the blue one is less volatile, and the red one has more up and downs and fluctuations and bigger fluctuations. So that's what a standard deviation does. It measures the risk and the volatility of a portfolio. Another metric is the drawdown or maximum drawdown. A drawdown refers to the decline in the value of a single investment or an investment portfolio from a relative peak value to a relative trough or relative bottom. So a peak value is the highest point that the stock or the curve went at. So the relative peak value here is in this area. If you were comparing the stock just in this area, you would see that the relative peak value is here. And the relative trough is the lowest price or the bottom of the lowest curve. And here in this area, you see that the trough is here. So the maximum, so the drawdown is basically the peak value minus the trough or bottom value divided by the peak value, and then you get a percentage. So here, say the peak value is 100 and the bottom value is 80, then you would get 100 minus 80 over 100, or 20%. So you would get a drawdown of 20%. A maximum drawdown is the maximum observed loss from a peak to a trough of a portfolio before a new peak is attained or a new trough is attained. So drawdown values are calculated based on monthly returns or daily returns, and we'll use the monthly returns in the following examples. The smaller the max drawdown, of course, the better a portfolio is. And then there's a Sharpe ratio. The Sharpe ratio is a measure of risk-adjusted performance of the portfolio. It is calculated by dividing the mean monthly excess return of the portfolio over the risk-free rate by the standard deviation of the excess returns, and the displayed value is annualized. The higher a Sharpe ratio, the better a portfolio is. So this is the formula of a monthly Sharpe ratio. It's basically the return of the portfolio minus the risk-free rate divided by the standard deviation of the portfolio. And the risk-free rate is basically just the 1 to 3 month US Treasury bond, because the short-term US Treasury bonds are considered so safe that they're basically like risk-free. So the risk-free rate is basically the rate you would get if you had invested in the short-term Treasury bonds. Basically, like in other words, like the rate like or the profit you would have received without any risk, supposedly. And to analyze the Sharpe ratio, you just take the monthly Sharpe ratio times the square root of 12. So here is a calculation example of the Sharpe ratio. Assuming the risk-free annual return is 4.5%, the first step is to find the monthly risk-free rate. So we know the annual risk-free rate is 4.5%. The monthly risk-free rate is then 1 plus 4.5% to the power of 1 over 12 minus 1. And you see this formula is actually the exact same formula for calculating the compound annualized growth rate. Because here, this formula is basically calculating the return of each small period of time in a large period of time. And that's the same thing we're doing here. We're calculating the average return from in a small period of time in like a big period of time. So the monthly risk-free rate is 0.3682%. Step 2 is to calculate the average monthly return. We take the sum of the 22 monthly returns. Note that this is the sum, not the compounded return. It's just like if you add up the returns for some reason. So you get 0.553 for the Hoperation Fund, and you take the average of the monthly return. And well, you take the average monthly return, so that's 0.553 over 22 because there's 22 months, and you get 2.51%. Note that you don't use the formula above, that we used previously for the risk-free rate, because here we're just taking the average. It's not compounded. So step 3 is to adjust for the risk-free rate. So we calculate this part here, the average excess return, which is the monthly return minus the monthly risk-free rate, which is about 2.14%. Then we calculate the standard deviation for the last part. Using this formula, we find the monthly standard deviation is about 4.22%. So then we have, using what we found from step 3 and step 4, we find the Sharpe ratio, or the monthly Sharpe ratio, is the average excess return divided by the standard deviation, which is about 0.5071. And most of the time, you'll see the annualized Sharpe ratio on websites or if in a financial newsletter. So to analyze it, you just multiply it by the square root of 12, which is about 1.76. So the Sharpe ratio for the Hoperation Fund is about 1.76. Compared to SPY, the SPY Sharpe ratio is 1.01, and since the bigger the Sharpe ratio, the better, we can see the Sharpe ratio for the Hoperation Fund is much better than than SPY. Oh, note here, I almost forgot. Here, this is technically the formula for calculating the standard deviation, but it's not like completely accurate, because here we're calculating the sample standard deviation, so it should be 1 over n minus 1, because this is the formula for calculating the population standard deviation, but that's like a really technical issue in statistics, so we can just ignore that. Okay. And I have okay, so now we can just compare the S&P 500 index fund to several famous portfolios. And you see here you see the Ray Dalio All Seasons portfolio has a Sharpe ratio of 0.26, which is really bad. But note that we're only comparing this from 2023 to 2025. So that's where you have to take in longer periods of time, because it's a more accurate way to measure the portfolios. And also, if you take in if you compare portfolios against each other for longer periods of time, there's a bigger chance you'll have a bear market in that period of time. For example, um, the Ray Dalio's All Seasons portfolio didn't have a very high Sharpe ratio, or it didn't do very well from 2023 to 2025, or from 2015 to 2025. But if you see here, it had a pretty high Sharpe ratio from 2007 to 2025. And this was because this period of time had two major bear markets, the 2008 bear market and the 2022 bear market. So the most effective way of comparing portfolios is to see how they do in bear markets when the stock market in general is bad. It's kind of like a way to pressure test a portfolio. For example, the S&P 500 index did really well in years with no bear markets or very little bear markets, but you see it did pretty bad in big bear markets. So it's important when you're comparing portfolios to compare them against a long period of time, so you can know how it does in both bull markets and bear markets. And typically, as you can see here, this is a recap of the 4 portfolios from 2007 to 2025 and their metrics. You can see typically a portfolio excels in some metrics but falls short in others. And different investors prioritize different trade-offs among these metrics. For example, you can see that the S&P 500 index had the highest CAGR, but it also had the worst year and the biggest loss or max drawdown. While you see the Harry Brown permanent portfolio didn't have as high of a CAGR or compound annual growth rates, but it did have the lowest standard deviation, and it had the lowest, the best max drawdown, which means it was very stable. So it really depends on which portfolios you prefer and your own investment directions and personality. And since we're running out of time, I will just skip over this. And yeah, that will be the end of today's meeting then. Thank you all for coming and discussing so many and participating in so many discussions, and see you next time.
Thank you so much.
you.
Bye.
Thank you.
Bye.
Thank you. Bye.
Bye.